Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the basics of swing trading. So if you're a new trader or you're a full-time trader or a professional trader, you guys are going to get something of value out of today's video. So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe, do what you guys do, and I appreciate every single one of you. And if you guys want to learn more about swing trading and the strategies and mindset and all that stuff that I have, we have an amazing school where I teach people my strategies and mindset when it comes with trading in the stock markets. It's absolutely fantastic. And for the next 3 people, you guys can use code HALFOFF to get 50% off. So check it out. And guys, trust me, I know when people think of YouTubers selling schools or online courses, they cringe. But guys, this is different. We have a private, group chat, private live streams, quizzes, lectures. It's absolutely fantastic. And, you guys will learn how to trade and cut down on that learning curve. So let's jump into this. So the basics of swing trading. So first we need to understand what is swing trading. So in simple terms, swing trading is when you buy a position, you hold it for more than a day, but less than 1 year. Time frame is super important when it comes with swing trading, and the reason why that is because it's trading. A lot of people have this association that one, you're in and out of position super fast. They see Wall Street, they see the glamour, they see the lights, the cameras. But guys, swing trading, I'm telling you, is different. There's a huge difference between day trading, which is a lot more involved than swing trading. Swing trading, on average, I do hold my positions for anywhere from about 6 to 9 days on average, and I've been swing trading full time for over 6 years, and there has been times where I buy a position that day and I do sell it that same day. It's rare, but it just does happen if you hit your profit or even if you get stopped out on that same day. Stuff happens. Now, there has been positions where I've held for several months. It all depends on the approach that I had with that individual stock. Now, the second thing that I do think that is super important when it comes with trading is going to be your entries and your exits. I do have an example from a stock that we actually called out in the group. Now, this is ticker symbol ABUS. So there's so many things with swing trading. So I do want to try to explain it as simple as I can. So the first thing that I do think is super important is understanding something called a support line. So a support line is just where we get tendencies of getting buying pressure. Now, buying pressure could be at a certain price, it could be at a certain indicator, it could be at a certain trend line. So with ticker symbol ABUS here, this one here has a variety of support lines. Now, the reason why I say that is because if we look at it here, we have the red line, the blue line, and then we also will draw a really nice trend line. The thing about swing trading here, in my opinion, is the amount of supports you have, they do play a factor with your trade. I am more likely to take a position or go heavier in on a position that has a lot more support lines than one that just has one, right? So with ticker symbol ABUS, we do have the blue line, we do have the red line, and then this green squiggly line down here on the bottom. Now, the thing is these are what we call moving average lines. So these are just indicators traders use to get an edge on other traders. Now, what these lines act as is trend indication. So you can look at it and you can instantly know we came from a downward trend starting to go to an upward trend. It acts as trend indication as well as support and resistance. When a stock is above the lines like it is up here, we've seen tendencies of getting support. So you guys will see it hits it once, twice, 3 times, 4 times, right on those lines, establishing buying pressure compared to when the stock fell below it. Now it acts as resistance where it taps it and just continues to sell off. So if you're looking to buy it, obviously you want to try to buy it as close as you can to these lines. It's just super important here. Now, the difference between the blue and the red is super, super simple as well. The red is what we call the 90-day moving average line, and then the blue is the 90-day moving average line. The red is the 200-day moving average line. Now, the difference between the two here is the 90 is going to be a weaker support and weaker resistance compared to the 200-day. I would more likely go heavier on a position if I traded the 200-day as an example. Now, the thing is here is this isn't the only support we have. With trading, we do have something called trend lines. Trend lines are one of the most underrated things traders don't look at. So what you're looking at here is a line that has a minimum of about 3 touches here. I think 3 is that golden number, at least in my opinion. And you guys can see it hits it several times here. Once, twice, recently, 3 times, and then again as of 4 times. So we do have that nice trend line support here, as well as the 90-day moving average line as support. And another thing here is we do have this down here on the bottom, which is the RSI line. The RSI stands for the relative strength index. This just pretty much determines if a position's undervalued or overvalued. Now, historically, anything underneath like a 30 or a 35 is going to be considered undervalued. And you guys can see that it was trading for near and around 37. So it could be a little bit not overvalued, and it's not as undervalued as we would like, but still 37 is really good. And we can actually go back and look at the last time it was trading for a 37 just so we can compare. And that was all the way back in here where the stock actually went from $2.50 to $3.29. So with swing trading, that is super, super important. Your entries and your exits. You could have the perfect stock, but if you're not buying at the right time and selling at the right time, you're going to lose money. So having indicators that you understand and can use is going to give you an edge over other traders. I do think that is very, very, very important here. Now, the thing about swing trading as well is I think a lot of people think that it's just constant buying and selling. You constantly are in positions or out of positions, but I also believe that one of the most important things that swing traders, in my opinion, need to focus on is patience. It's always better to trade a high quality stock that you understand, can read, and have confidence in rather than a sloppy position that you're unsure or you don't believe in or whatever it may be. Maybe it doesn't even follow your strategy and you're just buying because you have money in your account, and so you think you should have money in play, when the reality of it is, that's super important with risk management. Risk management isn't making money, it's actually just preserving money. So if you're trading sloppy plays, your risk management is going to go out the window. So I also believe here when it comes with swing trading is going to be education. I highly recommend you guys go check out my school where you guys can learn strategies like this, but not even that. I just think the more you learn, the more you're going to earn when it comes with swing trading and understanding the markets. It's just common sense. It's like a doctor or an engineer. The more they learn, the more they're going to earn, right? So you got to have that same mindset and same approach with trading, as well as practicing, using a paper trading account to practice your strategies, work on different techniques. And I think that's a really important thing that traders nowadays don't really do. They think it's easy because they watch YouTube videos or TikToks and they think everybody can be a swing trader, when the reality of it is it's a job. It's going to take a while before you guys make money from it. And this brings me into my last and final thing that I do want to talk about today, and that is emotional control. When it comes with swing trading, I would say about 80% of swing trading doesn't even come from, the stock or your strategy or, your scanners you use. It's going to be coming from your emotion side. When you buy a position and you see you're down on your money, some traders get scared or nervous, or maybe they sell their position or whatever it may be. When it comes to trading, you're going to have so many emotions involved and you need to be stone cold. That's the best approach and kind of headspace that I'm always in, just stone cold. And what I mean by this is if I have a profit target, I'm going to most likely take my profit there. If I have a stop loss, I will take my profit there. Or take my loss if I have my stop. But profit is a little different because you can do different techniques like trailing stop losses or a variety of different things to help you make more money in the long run. But you need to be stone cold. Emotions is so important. You'll have FOMO. You'll see your friends buying stock and you think you have to buy that same stock. And the biggest thing, trade your stocks, trade what you understand. Focus on education before you guys fund an account and just start that process of learning. So guys, hope you guys all enjoyed it. We'll end it here. Like, subscribe, and I hope you guys have a fantastic rest of your day. And we'll see you guys tomorrow in the next one. Don't forget, code HALFOFF, 50% off, and we'll see you guys in there. Take care.